Boom. Hi and welcome back to another Whoa, 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 whoa. Hi and welcome back to another schema scalper video. In today's video, we're going to be looking at Nasdaq, the trades I took on the 2nd of April. Um, so we'll start with market profile, then we'll move into the bands that I use, and then all the way over to the indicator or the chart that actually gives me my entries and tells me where to put my stops, things like that. Okay, so we've got Nasdaq E-mini futures. So this was yesterday's profile. We have decent balance, so I use that. Also overlaps with another day, so I kind of had um more trust in this profile now. That's value area high, value area low. Didn't mark out pointer control because I didn't think it was an important reference. Yeah. Also this, when, let me just make this full screen. When you're trading Nasdaq, S&P, Russell, Dow Jones, do not use ETH. Always use RTH um when you're building out composites and when you're building out your market profile narrative, you could say that. Okay, now I've got that. So my ideas were, where did we open? Why isn't it giving me? Oh, it gives me open over here. Open, bounce here, and then move to this low, something like that. And open, push into it, and across, and then we'll see from there. So it kind of did the second one. Also looking at 9:30. So everything before I ignore, but I need this on because I need to know how the this is overnight or the morning session in London, how they performed and what they interested in. As you can see here, if you use this during London, we opened here, push up, and now from here you could be looking to take shorts from here, and then we're below this line, so you're again looking to take shorts all the way to the end down here. I'm still on footprint. I don't use footprint with this. With Nasdaq, I try not to use footprint just because the volatility is crazy, and to look at numbers and value areas and all of those things, I don't have a monitor that's big enough yet. When I get my bigger monitor, my third monitor, nah, I don't think I need a third monitor. I'm good as it is. So this is the areas you look to go short. Now I can see, okay, that's what those overnight players are doing, which is this black line. And then I put on an anchored view app, which is this pink, and I overlay that, and I see in this area, that's how it's moving. That's how it's moving. So if it's above that line, I'm looking for buys, and you can see it breaks above this market profile line as well. So we've completed this rotation from this low to this high, completed that rotation. So now the next thing to do is break, which we don't break until up here. And then we also need to hold this band So we held the band, and now that's where my entry comes in. So all of this we're looking at before we're looking at this chart, because if you look at this chart without understanding what's going on here, you are just going to be even more confused than when you started. Okay, so I'll delete all of this so we know our bias is to go long. Delete all of that, and now I'll show you exactly why I got into my entries and why I got out. We'll go into 1 minute chart. I actually have this on a different screen usually. So I'll have a 1 minute and this combined tick on one screen, and then 3 minute, my market profile, my other tools that I'm using, and my CVD, which is cumulative volume delta. Let me just show you this. So CVD was telling us there's a big bounce. So there's key levels in CVD. It's negative 20,000, 0, 10,000 minor, and then positive 20,000. I actually didn't put in another negative 10,000. Oh, let's delete that. Let's take this, clone it. That must be negative 10,000. That's like a minor level. The big levels are negative 20,000, positive 20, 0, and then 35,000. When you add 35,000 CVD in NAS, what I realize is that it holds its trend. It holds its trend more often than not. 50,000 is extreme. This like we are pushing. But you see where it comes from. It comes from 20,000. That 0 is where you could look for entries. Now you know, okay, there's a shift. The shift would actually be, you could use simple trend lines like this. See, okay, boom, it bounced there. That's the shift. Now you can start looking for longs because the overall market, this delta is showing like an overall market participants in terms of volume. They now overall long. So that is, just look at that time. That would have been, and I usually do this on a 3 minute chart just because I don't want to see all this. Ugh, sometimes it's ugly. At 9:30, at 9:30 was that shift, which you see right there, 9:30, and then large buying comes in. But we're not interested in that because that's still moving from one end to the other. We're interested in fast trend, which is here from VWAP actually, 10:11 or onwards. But this was where I got into the market 11:15, and I'm going to show you exactly what I was looking for. So I see here's a bounce. Let me put this out the way. So first of all, in terms of market profile, which is this horizontal line, we are now above that value area high, which means it will continue searching for balance and value above until it gets back in and then becomes rotational again. But for now, we are above, we broke out, we bounced there, we bounced here. So I'm looking for longs. We are above that band and we just got into it. We spent so much time just trying to press, and there's a real exact bounce at that band. And now to me, this was just a stop run. So I'm going to show you how I do my entries. Okay, actually I have a, where's my text? I lost my text. So this is the tick Q chart. You can see it up here, tick Q. This is, oh, let's move that out the way. Nasdaq combined tick. This is a 1 minute chart. So what I'm looking for is a push to the extreme, and my extremes are actually, I've done a video like this actually already. My extremes on this is 600 and 1000 in terms of buying, and then in terms of selling, it's minus 600 and then minus 1000. Certain people have different levels for buying and selling because they think that markets always go up. So you don't need to have this at 600, they have maybe at 400. And then I've got my zero line as well. Zero, which is neutral. Um, Actually, not neutral, it's fast trend. It's fast trend. So this dashed line is my trend lines. So if it hits this dash line at negative 2000, I'm looking to buy. Oh, that's not a good green. Oh, crap. I'm looking to buy that. That's a good green. And then at positive 200, there, I'm looking to sell. There's obviously there's no whoa. There's obviously criteria that has to be met before this. So you have to have your narrative, which we got from market profile, and you have to have just an understanding of short-term moves, like maybe this move is up for now, and you can use VWAP for that. You can use moving averages. You can moving average crossovers, all of those things. But what's important is that you have an idea of where you want to see or where you're anticipating the market to go. You're not forcing the market to go there. You're not, how can I say this? You're not wanting it to go there, but you have an idea of where it wants to go. Okay, so we're looking for an extreme. So just has to touch that and then a pullback into this buying area. So this would be let me clone this one actually. That would be my buying area as an extreme. And usually when these extremes get hit, it creates a short-term top in the market. Sometimes it's a long-term top like up here. 1312, that was a long-term or medium-term bounce just because it was holding so much above 600. And when this happens, we usually have large corrections. Oh. I could actually show you examples now of the sell side as well. Um, yeah. So you're waiting for an extreme and then a move across to negative 200. That's your buy signal. And then before you enter the buy, I'm going to show you a trick that I found. Small little trick to get you onside more times than not. So I've marked off this every time I touch that negative 200 line. I mark it off as hit. And on here, I marked it off as up arrows. So what you want to do is you want to see it hit that 200 or negative 200. In this instance, it's negative 200. And then you want to see the next candle, the exact next candle on the 1 minute chart to break the high of that candle at hit. So you can see the time here is 11:13. 11:13. Did we break the high on the next candle? No. 11:14, there was a hit. Did we break the high? Or 11:14, did we break the high on the next candle? No. 11:15, there was no hit. 11:16, there was a hit. That's the hit. Did we break the high on the next candle? Yes. So we go long, stop at the low of this candle. What you're targeting is 1 to 10 R. You're not going to always hit this target. A lot of times you're not going to hit the target. But that's the target. If it gets to 10 R, you take the trade off. If you want to hold it for more than that, it's a bit more, how can I say, mentally challenging. It's a bit more mentally challenging seeing, it's not seeing 10R, but seeing 10R kind of erode. That's what's mentally challenging about it. So if you had it right all the way to the top and it goes to 9.9 and you haven't trailed your stop and it comes all the way back to take you out 1%, your mind is not registering it as 1 hour loss. You're looking at it as 11-hour loss because those unrealized gains is kind of throwing you off. So break of the high, you enter long and you're holding this trade until the extreme gets hit again. When the extreme gets hit, listen, when the extreme gets hit, you trail your stop to the bottom of that candle. So 11.21, you trail your stop to the bottom of the candle at 11.21. Boom, still trending, still trending. Another extreme gets hit, 11.26. Trail your stop to the bottom of this candle. Another extreme gets hit, 11.27. That should have been where you're out. And that's where I was out. That was 7R. This one was a bit more tricky because it was a very large stop. Let's go back to this. So it's 51. So we have that extreme hit. Now we're looking forward to go to the other end of the range, or the other end, to start kind of the buying program. So we've got this 44. Did we take out the high at 44? No. 45. Did we take out the high? No. 46. Still not. But we're still in that range. We still, yeah. 47. Not. Still on that line. 48. Not. 49. That did, doesn't look like it touched. Yeah, 49 didn't touch. So we got 50. 1150 touched. Never took out the high. 1151 it touched. And then 1152 took out the high. So now that's your long position. Going long from there. Oh, let me control Z that. Let me lock that in place. So you're holding all the way until it hits the extreme. It's the extreme here, 1209, 1209, 1209, 1208, 1209. What was I looking at here? 1203. Yeah, I wasn't liking this large red candle here. I don't think I should pay too much attention to it for now. I was looking at that like a soft stop because it did bounce. Oh, I didn't actually reach there. Seeing ghost. I was seeing ghost in that position. 1209. See there. Trail your stop. 1210 doesn't hit. 1211. Trail your stop. So that 10 shouldn't actually be there. I trailed my stop even though it didn't hit. 1212. Trail your stop. 1213. Now you're leaving your stop at 1212 and you're just holding that. 13, 12, 14, 12, 15 hits the extreme. 12, 15. That's where it closed. Trail your stop to the low. And you get stopped at next candle. That's alright. You still have bias of it going long. Still have a long bias. And you have this long bias until this extreme gets hit. Till this extreme gets hit. Whoops. That's a really deep red. So now you hit the extreme. Now you're waiting for it to pull back. And this is the pullback you've been waiting for. Down to the negative 200s. You're looking at it. Okay. Boom. 37. So it's, oh, that's why I was looking at 19. Yeah, so I was looking at 19. So usually when you have a bounce at 0, you could also take entries, but it's not as good. I haven't looked into it too much, but I know I've looked at negative 200 and 200, and these are good entries. I think this is more for continuation, um, giving you understanding that yeah, we are still long and we are strong long. Okay, so now we have this touch at 1237, 12. Wait. Where was I long? 19. Oh yeah, I was long at 19. So 19 hit the zero. Next candle closed above. I went long. Stop below the low. Almost stopped out. Wasn't. Boom. And then 1229. Trailed my stop. Oof. 1229. 1229. Trailed my stop here. 1230. I wasn't stopped out. 1231. Hit an extreme. Trailed my stop again. That one I got stopped out. But now we came from an extreme. Now waiting for it to get to negative 200. Gets there. 1237, which is this candle. 1237. Next candle doesn't take out the high. 1238. Next candle takes out the high. But all this candle was forming, it pushed through the low first. I need to go and look into this more in terms of stats. If it pushes through the low first before pushing through the candle high, because back here, if you look at these ones, it never goes through the low. Oh, here. Oh, this one also doesn't go through the low. This one doesn't go through the low. So here, while the candle was forming, it really pushed through the low. I wasn't sure on where to put the stop, so I used a different approach. I took a long with a stop below that low, and then I got stopped out for. Actually, no. I got stopped out with a smaller position because I wasn't sure of that. Got stopped out with a smaller size, and then I took a re-entry when it came back. So it pushed through and then came back. I took a re-entry, and now we're waiting. We're holding it till it hits an extreme. 1248 hits an extreme, so we're trailing a stop. 1248, trailing our stop. 1248, 1249, trailing our stop. 1250. We've got a candle missing. I don't know where that one went. Oh, gap up. 1249, 1250. So I should be. Oh, I see now what I'm doing wrong. I see now what I'm doing wrong. So yeah, I should be trailing my stop all the way up to there. Since we're above that 600. So if it's above 600, you're looking at it to be sort of overbought, air quotes, overbought, but also fast trend. It's it's kind of weird to wrap your head around it, but it's either going to be moving fast in one direction or moving. Oh, no, it's actually quite simple. Moving fast in one direction or moving fast in the opposite direction. And coming back to kind of take some of your profits away. So this should have been 124, 125 instead of 1 2. I think I got out here 51. It was no, it was this one. 2. Trailed my stop to here. Got out there. 1 to 3. That's actually terrible. I could have taken another 2R. Okay. In terms of management, I need to do better. Okay, we're coming from an extreme. And now because it was holding that extreme for so long that I thought, okay, this is probably the zero line is probably gonna hold just because it was on that extreme for so long. So it's the same setup, zero. So as soon as it hit 0, 1256, 1256 was the high taken on the next candle. Nope. 1257 was the high taken on the next candle. Yes. Boom, I got long there. No need to move your stop. No need to move your stop until 1307. 1307, I trailed my stop. Clone this one. Trailed my stop. And then here, I think once it closes above 600, I should just keep putting my stop below the low of the next candle, below the low of the next candle. Because if I trailed my stop all the way up to 1312, I could have been able to actually capture another R, I think. Another one R. 12. But stopped at 3. But if I had to hold, yeah, but 0.7 R. Yeah, I should have held it longer. Boom, 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 boom. So my stop was also I waited for this candle to kind of push down 13 instead of putting my, yeah, if it's above, I need to look into that more. If it's above 600, do I hold it? Do I hold it or do I just have a really tight stop, really controlling stop, and not have it more free as I'm doing it now? I think having it, yeah, having a much more tight stop would be great in that instance. And then here, boom, that was the last trade I took, which was a loss. So it's 1 2 3 4 5 6 trades, 5 winners at 7, say 10 and a half, 13 and a half, 16 and a half, 19. So that's, and then the minus one, 18 R. If I had decent size, that would be nice to have this kind of trading. But now let's look into this area. Ooh, I'm actually like foaming at the mouth now. This area. Uh, delete that. Let's look at this area for potential sells into view app. So yeah. So that is 1240, 1345, 1345. Yeah, we hit an extreme. Ooh, actually gassed. We hit an extreme, yeah. And then 1355. We come back to this plus 200. And then 1403. So 1355, 1356 1355, next candle, no. 1356, next candle, yes. 1356, 1357. So this could have been a short opportunity. A really tight stop. Oh, that's too tight. And target is view up or at market profile. It's 1 to 12 risk reward. You would have gotten stop out. And what time is that stop out? 1303. Wow. 1303 stops you out and you get right back in there. So you're taking that short at the high. Target is view up. Every time it gets to an extreme, so 14, 1405, 1405, right there, you're already moving your stop. 06, already moving your stop. 06, it hits again, loan, and you've been out. Oh, negative risk reward. Oh, that kind of sucks. Actually, it doesn't kind of suck, it does suck. Is there another entry? 1413, 1414. Came from the extreme. And now 1414, 1413 is 1413. Doesn't go below. Next one, 1414. That one pushes below the next candle. And that is a good short. Obviously, it's a good short because you can see it in hindsight, but boom. Stop at the high. Target is higher than market profile. And we're holding until 1419. Hey, what are you doing? 1419, putting our stop. There's too much stuff on this chart. 1419. Let's move this over. 1419, and we are out. Again, another 1-to-1. From 1419, we're looking at 1422, and we short again. Stop above the high, same target. 22, 25. Can move our stop. Hey, man. And we are out again. Ooh, that's really bad actually. 1425 pushes through the highs, and we need to get out. Do I don't want to form fit this. We did get positive results as like 2.3 odd, but at the same time, there's a lot being left on the table. Um, yeah, I think that's where we stop for today. And we're jamming. 1446. Like here you can see, oh man, 25. Nope, 26. Yep, boom. That's the long. It stopped out 30. That's the long. Stop below that low. Oh gosh. 35. That's the long. So if you think about it, there's actually two ways to move your stop. It would be re-entry into the trend, or it would be the extreme being hit. I think extreme being hit is more precise. Just because after the extreme get hit, you get these kind of big moves down. Like here, for instance, 42. That extreme was hit, and then you have this big move down. Yeah, yeah. Actually, the go. Okay, I hope you guys enjoyed that. Hope you learned something interesting. I definitely did. Okay, cheers, bye.